Hello everyone! Welcome back to the MoneyWise Engineer. In this video, pag-usapan natin ang dalawang popular investing strategies, ang dividend investing versus growth investing. Merong unique advantages ang bawat strategy, kaya pag-usapan natin ang kanilang pagkakaiba, pati na rin ang pros and cons, para malaman mo kung anong investing strategy ang the best para sa'yo. Let's start with dividend investing. Dividend investing is a strategy that focuses on companies that pay out a portion of their profits to shareholders in the form of dividends. Merong tatlong dividend investment categories that we can choose from. Unang-una, yung dividend stocks or common stocks ang tawag natin dito. And then meron ding preferred shares or preferred stocks. And yung pangatlo naman ay ang REITs. Key metrics for dividend investing. Para ma-compare ang iba't ibang dividend-paying investments, ginagamit natin ang dividend yield bilang standardized measure. Dividend yield shows how much dividend income you can expect for every peso invested. Ang computation ay dividend yield equals annual dividend per share divided by share price. A higher yield can mean better income, pero importante to assess yung dividend sustainability. Kailangan din i-check ang dividend payout ratio. Yung dividend payout ratio shows the percentage of a company's earnings paid out as dividends. So this helps you evaluate if the dividends are sustainable or not. Pag masyadong mataas ang dividend payout ratio, hindi sustainable ang dividends, lalo na pag bumaba ang earnings ng company. A dividend payout ratio of less than 50% is considered healthy. Importante rin to check the dividend growth rate. This reflects how much a company increases its dividends over time. Pag growing ang dividend, this indicates financial health and a commitment of the company to rewarding their shareholders. How do dividend stocks work? Every company makes a capital allocation decision on how much of their net earnings to reinvest towards growth versus returning to shareholders. Yung dividend is the portion of income that the company decides to give out to the shareholders. And then yung board of directors ng company ang magdi-decide whether to pay dividends and how much to pay out. Companies that pay regular dividends are usually well-established companies na, kagaya ng mga kumpanyang ito na kasama sa dividend portfolio ko. Their focus is on providing steady dividends to shareholders, making them ideal for those seeking consistent income. Sa dividend stocks, payment schedule ay either quarterly, semi-annual, or annual, depende sa company. Next ay preferred stocks or preferred shares. Preferred shares provide a fixed dividend and priority siya versus common stocks when it comes to dividend payments. And they offer more stability in income pero less potential for capital gains. Ang gusto ko sa preferred shares ay hindi sila affected ng market volatility. Napaka-stable lang ang share price. Wala nga lang malaking capital appreciation. Sa consistent dividends ka kikita and quarterly ang payment ng dividend. Meron akong apat na preferred shares na hawak until now. Fixed ang dividend amount na nakukuha ko quarterly. SMC2O ang pinakamataas ang dividend. 7.73% ang net dividend. Less 10% tax na ito. CLIA2 ay 7.42% at yung ASIN-B naman ay 7.2%. Petron ang pinakamaliit ang dividend, 6.18% ang net dividend niya. And nakuha ko pa ito noong 2019. Next ay REITs. Favorite ito ng karamihan ng mga dividend investors kasi quarterly ang distribution ng dividends. REITs are required by law to distribute at least 90% of their income to shareholders as dividends. Kaya sa REITs, guaranteed na meron kang makukuhang dividends quarterly. Pero ang dividend amount ay hindi fixed. Puwedeng tumaas or puwedeng mabawasan depende sa performance ng company. If you want real estate exposure without managing properties, magandang option ang mag-invest sa mga REITs. Ang top 3 REITs based on performance ay A-REIT, C-REIT, and RCR. Kung mag invest ka sa mga REITs, unahin mo ang tatlong REITs na ito kasi meron silang strong fundamentals and growing din ang dividends nila. Puwede rin sa MREIT, meron din akong MREIT. Mas mataas ng konti ang dividend ng MREIT kaysa RCR, so nasa 7.43%. So napag-usapan naman natin ang benefits of dividend investing. Siyempre unang-una, consistent cash flow. Dividend-paying investments can provide a steady stream of income. Pangalawa, it can also help reduce the impact of market downturns. Maski bagsak ang share price ng mga stocks, tuloy-tuloy pa rin ang pamimigay ng dividends. Kaya look for companies that consistently pay dividends and increase their dividends kasi sila ang financially stable. And number three, meron ding potential for capital appreciation over the long term, except lang for preferred shares. One disadvantage of dividend investing is lower growth potential versus growth stocks. Kasi dividend stocks prioritize paying out dividends to their shareholders. So they may reinvest less sa mga growth initiatives. Ang growth rate ng dividend stocks ay mas mababa, typically ranging from 5 to 9% ang annualized growth rate sa earnings and revenue. Next is possible policy change sa mga common stocks. So even companies with a history of paying dividends, they might decide to reduce or stop giving dividends in a particular year due to factors like poor performance, economic downturns, or other company-specific issues. Kaya nung nagkaroon ng pandemic, may mga dividend stocks na hindi nagbigay ng dividends kasi nga affected ang kanilang earnings. Dividend investing mistakes to avoid. Unang-una, yung dividend value trap. A high dividend yield does not always mean that it's a good investment. It's important to be cautious of companies that pay out too much of their earnings as dividends. Another mistake to avoid is focusing only on high dividend payouts without considering the company fundamentals. Kaya importante mag-invest ka sa mga companies with good fundamentals, merong strong competitive advantage, and healthy ang kanilang balance sheet para hindi magkaproblema. Next topic, pag-usapan naman natin ang growth investing. Itong strategy for those aiming for higher returns on their investments. Growth investing focuses on companies that are expected to grow at an above average rate. These companies often have high revenue growth and meron ding potential to become industry leaders. The biggest advantage of growth investing is the potential for significant capital appreciation over time. Perfect ito for investors, lalo na yung mga bata-bata pa with a long-term horizon who are willing to wait for the share price to appreciate. Kaya lang sa Philippines, konti lang ang publicly listed companies sa PSE na pwedeng pagpilian. Sa US stock market kasi, merong over 5,000 publicly listed companies sa stock exchange. Kaya maraming companies na pwedeng pagpilian pag maghahanap ka ng mga growth stocks. Meron namang mga mahahanap na growth stocks sa Philippines kung masipag ka talagang mag-research ng mga stocks. Example ng growth stock sa Philippines ay ang Seven. Ang past 5-year growth rate sa earnings ay mataas, nasa 43.7% and 14.1% naman sa revenue. Significantly higher ang growth rate ng Seven versus industry and market the past 5 years and the past 1 year. At ang future growth rate forecast naman ng mga analyst ay mataas pa rin. Seven is forecasted to grow 17.4% sa earnings and 12.9% naman sa revenue. Importante sa growth stocks, dapat sustainable ang kanilang growth rates. Ang taas din ng return on equity and return on invested capital ng Seven. Affected lang ng pandemic noong 2020 and 2021 kaya bumaba. Pero mabilis namang naka-recover noong 2022. Ang 12-month target price ng MSN ay 90 pesos. I calculated yung intrinsic value ng Seven using yung valuation method for growth stocks na natutunan ko sa Value Investing College at ang nakuha ko ay 100 pesos. And then with 30% margin of safety, ang buy below price is 70 pesos. Disadvantage of growth investing. Karamihan ng mga growth stocks don't pay regular dividends. Kung meron mang dividends, usually mababa lang compared sa mga binibigay ng mga dividend stocks. Kaya hindi siya ideal for those looking for steady income stream. Sa dividend investing, so maski bumagsak ang share price ng mga stocks, hindi mo kailangang mag-cut loss pag dividend stocks ang hawak mo kasi you will be rewarded while waiting for the share price to go up. Pero kung bumagsak ang share price ng stock na hawak mo dahil nag-deteriorate ang performance at walang plan for recovery, then exit ka na. In conclusion, both dividend investing and growth investing offer unique advantages. Kaya pwede ka rin mag-hybrid strategy. Combine mo ang dividend stocks at growth stocks sa portfolio mo. This approach offers the best of both worlds, steady income from dividends and higher potential returns naman from growth stocks.